Welcome back, traders and investors. We have Ted Serbinski on the line, and he is a partner at Detroit Venture Partners. Ted, how you doing today?
I'm doing great, guys. Thanks for having me on the show today.
Okay, a lot of action in the markets today, but we want to talk to you a little bit about what's going on in Detroit here. We're not too far from the Motor City, but before we do that, can you give us a little bit of your education and your employment background?
Yeah, just my quick 30-second bio here. So I went to Cornell University, was a computer engineering major. After school, was living outside of Washington, D.C. I got involved in a open source project called Drupal, which is a web framework content management system. I actually think Benzinga is using it or was using it for a while. It now powers about 3 or 4% of all websites online. And along the way, ended up starting a company with a buddy of mine called ParentsClick, and we built up the largest blog network for moms online. And we actually sold that to Lifetime TV 52 days before the market collapsed in 2008. So pretty good timing there.
Are you a market timer, Ted? Are you a market timer?
No, I try to be, but so yeah, we just closed that one, and then that brought me out to San Francisco. I was working as a director of technology for Lifetime TV. Later, we got acquired by A&E Television, and so I was there for about 3 years. And after that, during that, ended up getting engaged to a beautiful gal from Detroit. And she convinced me that Detroit was where it's at, and we moved out to Detroit about 3 years ago. And since then, I've been a partner here at Detroit Venture Partners.
It's so funny because you were giving me your background and everything, and I'm like, this guy's not from Michigan. And the young lady brings you back because that's great because you got a lot of young talent coming back to the Motor City, and it's great that we attracted an entrepreneur such as yourself. So are you still like that? The acquisitions and stuff. So you're not active with those companies at all. Just kind of cashed out and moved on.
Correct, exactly. So now I'm focused on helping to kind of really lead the startup renaissance here in Detroit. And at Detroit Venture Partners, we're a early stage software fund. We've invested in 24 companies over the past 3 years, and continuing to really kind of shatter conventional wisdom around investing in startups in Detroit and Michigan, and really helping to drive the charge here.
And so, what do you look for in startup software companies? 24 of them. What kind of criteria do you use to make an investment?
So the stage we invest is, the exact opposite of the public market. So we're looking at really the idea stage where you have a handful of team members with a great idea or a great entry to a market or maybe a product. And so you can't judge it with like looking at financials and revenue because frankly none of that stuff really
They don't have any.
Stage. Yeah. So we have to use it's a little bit more of an art and a science, but it really boils down to ultimately the team behind it. And the right team will be able to navigate the markets, navigate the product issues, and really be able to build something of lasting value. And so we really spend most of our time kind of working with the teams and pattern recognition to see if there's certain red flags or yellow flags that kind of creep up in our communications.
So as you invest, like people invest in the market, they have a diverse portfolio and they do things. Of these 24 companies, are you looking to hit it on one or two with your investment to make things profitable, or are you looking for a much higher percentage in order to make money on your capital?
Yeah, so it's exactly that. It's one or two that you're really looking for the big return. And so investing at this stage it's all around kind of this theory of power law of returns at this stage. And so ultimately like one out of every 20 or 30 investments is really going to return your entire investment funds. And then maybe two or three will return maybe half of that. And the rest of them collectively might return one. And so it's hard at this stage because there is no revenue, and it's still early in the product phase. And so you have to really look at the best teams that you think can kind of wither all kinds of up markets, down markets, can, as new products come onto the market, kind of navigate and really build something of value. And there is a little bit of luck in there. And so that's why you don't see a fund usually invest in 2 companies. It's usually you're seeing 20 or more, and so they really want to spread out that risk there and kind of really see if they can find that 1 or 2 big winners.
Of the 24 companies that are currently in your portfolio, are they in all different, sectors, I guess you could say, or is it all in the financial tech sector? What is there any kind of concentration, or are you very well diversified?
Yeah, for us, we're spread out across sectors. We're really focused on great entrepreneurs in Detroit. And so our thesis really revolves around that this region's undervalued right now. There's not a lot of investors in here, and so we can kind of go across sectors because there's not a lot of competition from an investment standpoint.
And do you require these firms to come and settle in the Detroit area, or they just all spread all across the country and all across the world?
We've primarily focused on ones that want to be here in Detroit with us. About 80% of our portfolio is with us here downtown Detroit, same building. I'm looking at a handful of our companies actually outside my office window right now. And the reason for that is at this stage, there's a ton of mentorship required.
Okay.
And it's really, really hard to work with a small, nimble company if they're 2,000 miles away in California. Things change on a daily basis, hourly basis, and so having a team that's experienced that can work with them, mentor them, it makes a huge difference in the long-term outcome of the company.
Wow, 24 companies, and you're doing the mentorship for them. You must be pretty busy. What kind of mentorship do you provide them?
So we're pretty much having a team of operation-focused guys. We can do everything from I've helped them fix database issues and scaling to their website to coming up with sales plans and how do you incentivize a sales team to what does a marketing plan look like, what specific tools can we use, how do we measure that, introductions to senior team members that join the team, other investors, corp dev. We kind of consider ourselves almost like a partner in one of these companies that we're going to do everything in our interest to help make it as best of an outcome as possible.
Okay, Ted, I got to ask you about stocks in the technology sector here, and I don't know if you have any in your portfolio, but yeah, do you have any favorites? Maybe there's some out there that in the investment landscape that you think are. So, I mean, you have your Twitters and your Facebooks and things of that nature. Any tech stocks that you like to follow?
Yeah, definitely. I think my favorite one of all time has always been Apple, and
Okay.
the Apple for me is I just love the way they do products, and they keep it extremely simple. They keep it quiet, but I just love their philosophy, and I think it's very obvious to you when you look at how they're putting products on the market today. You can kind of draw the lines of where their products are going to be down the future, whether it's a rumored Apple TV or an iWatch. You can see that all the pieces to an Apple TV or an iWatch are already on the market today. They just haven't assembled it. So that's one of my favorites. I'm also a big fan of both Facebook and Twitter, and I know they've had some positive swings in the market lately, and before there's some downswings. But I think when you look at the next 5 to 10 years, as the world changes, these are in my opinion, the new AT&T stocks of the 50s and 60s is the Facebook and the Twitters. Communication is drastically changing. And so I'm a big fan of those guys. And then the Apples of the world where it has that hardware in your hands, the interface of those.
Okay, we get one quick question out of the chat room. What is the percentage of applicants that you turn down?
So I don't know, off the top of my head, the math, I'll leave it to you guys. So we saw over the past about year and a half, we saw 3,000 applications, and we invested in about 10 of them.
Wow!
So
wow!
it's a very, very small chance of getting investments, and it's pretty consistent with the industry. We see high number of applications, very low number of investments there, and it's incredibly hard too to make sure we're filtering companies, and so we're going to miss things, but we try our best to kind of find patterns and follow things and make it easy to sift through that quickly.
Okay, and is there any tech stocks that you just think, oh man, these things are so overvalued, I can't believe they're trading this high?
Actually, no, I'm not. I'm not super deep into the public markets in terms of that. I mean, I'm so risky at the early stage with what
Okay,
we're
I
doing.
gotcha.
But I don't know. Honestly, at the top of my head, I don't have one that I think's overvalued.
Okay.
Um,
Okay, and and things here. Can Detroit really be the next Silicon Valley?
in my opinion, yes,
All
and I think it's
right.
actually going to be
Yeah.
a Silicon Garage or a mobility in Detroit. But I think we're going to in the next. My opinion, the next 1 to 3 years is Detroit's really going to establish itself in the type of startups that can thrive here. And I think we're going to be a breakout market in the next 5 years. And so I'm a big fan of buy low and sell high in Detroit market.
Oh, that's great. I think you're going to have a new phrase trending on Twitter now. Silicon Garage. That's a great one, Ted. Well, thanks a lot. We talk all about the markets and up and down and stuff, but it's great the work that you're doing here in Detroit. Thanks for coming on and tell us about your company, and we certainly hope to have you on again.
Yep. Thanks, guys, for having me. Have a great day.